Welcome back to the channel. I hope you've had a good week. We're looking forward to another profitable week. I would like to touch base on Roth IRAs. What are they? Give you a quick overview of them. I do have one. My wife also has one. They're beneficial. The younger you can start it, the better, of course. You don't have to try and overload it. Matter of fact, there's limitations to how much you can even contribute every year. There are income limitations. You can't make over a certain amount and have a Roth IRA. Don't worry. I feel like most of the people I'm talking to here are like me. They're honest, hardworking people. They use their labor of physical and mental capacity to earn a living. So I would say most people are in the middle class, and it's exactly what I think it was designed for. So a Roth IRA, you can see right up front here on your screen, offers tax-free withdrawals. The word tax-free is huge. That will mean a lot, I believe, in the future. I have been talking to a lot of people who have retired, and like they said, if they could get an extra $300 or $400 a month tax-free, that would be huge. That'd be like getting $500 extra a month in your pocket. So with a Roth, you get a future bonus. Every penny you withdraw in retirement stays in your pocket, not Uncle Sam's. You pay $0 on your withdrawals from your Roth IRA in the future. And if you follow the rules of dividend investing, hopefully you'll have a monthly dividend of, say, $500, $1,000 a month. You literally can just draw the dividends off the account and let it sit there and continue to pay you monthly, and it's tax-free money. So what is a Roth IRA? A Roth IRA is an individual retirement account that offers tax-free growth and tax-free withdrawals in retirement. Roth IRA rules dictate that as long as you've owned your account for 5 years and you're age 59 and a half or older, you can withdraw your money when you want, and you won't have to pay federal taxes. Let me go over that very last line again. You can withdraw your money when you want to, and you won't owe any federal taxes on that money. That will be a huge plus for everybody in the future. So there are some other advantages to a Roth. Now, I do want to bring this point up. You can't take off what you invest. What you take out of your pocket and put in the Roth IRA, that's not tax deductible. What is of the benefit is all the dividends and interest and growth that makes is completely tax-free, federal tax-free, no federal taxes. I'll repeat, 0 federal taxes on whatever it earns and whatever you take out after you retire at 59 and a half years old. So we'll go down through here a little bit here. There are no required minimum distributions for as long as you live. Get details on IRA withdrawals. This is just a simple website. Actually, it's an investor. It's a Vanguard website. I have no affiliation with Vanguard or any of the other things that I show you. These are just websites that I frequent to see where I can get the best information. So we'll go on. No age limit. Contributions to a Roth IRA do not have to stop when you reach 70 and a half. The cutoff for a traditional IRA. You could keep putting money into your account as many years as you want, and you can, and the income, as long as your income qualifies. So we'll go on. There are no employer plan restrictions. It doesn't matter if you're covered by an employer's retirement plan, such as a 401k, a 403b, as long as you don't exceed the IRS's income limits, you can still contribute the maximum annual amount to your Roth IRA. For the 2018 tax year, that's $5,500 or $6,500 if you're age 50 or older. For the 2019 tax year, that's $6,000 or $7,000 if you're 50 and older. So what that is actually saying is, if you're under 50 this year in 2019, you could contribute $6,000 into your Roth IRA. If you're like me and probably most of my friends, you're 50 and older, you can contribute $7,000 into that same Roth IRA. Once again, you can click on this link right here. You can get more details per contribution limits and deadlines. We'll go on. This is a very important thing. So many retirement plans. You work your whole life, you get all this money built up in a retirement plan, and you retire, and a year or 3 months later you pass away. Some of them will let you actually name one beneficiary, usually your spouse, and they can withdraw a reduced limit of your pension as long as they live. But this next thing I'm going to tell you about Roth IRA is very important. No taxes for your beneficiaries. You can pass your Roth IRA onto beneficiaries, and their withdrawals will be tax-free. So if say I have one and I pass away, I would name my wife and maybe my 3 sons as beneficiaries. Of course, while my wife was alive, she would probably draw all the monthly dividend checks. However, after she passed away, naturally that money would be passed on to my sons. That's what I have checked into so far and found out. There are not very many retirement plans that will allow you to do something like that. So not only are you preparing for your retirement, in a way you're kind of leaving your children or whoever you want, your wife. Like I said, my wife is a beneficiary of mine, also is listed as my sons as well. So whenever I pass away, my wife gets to draw the money. Naturally, when she passes away, my sons will draw that same money out tax-free. That is a huge benefit to this type of a retirement account. So when you're doing these things, start thinking about who's managing your money and what the benefits to them managing your money is going to be. So some things to think about. Your Roth IRA contributions are not tax deductible. So don't try to take them off on your taxes at the end of the year. It will not work. There are some income restrictions. Sorry. They are, you can find those on the IRS website. Many other places are going to let you know what they are. Is your income okay for a Roth IRA? If your income is too high for a Roth IRA, you could get a Roth through a back door. So I'm not going to get into that real well. I'm not giving you advice on how to go about doing it as far as doing it through a back door. I do have the Roth IRA income contribution limits on the next page we're going to look at real quick. The younger you are when you open your Roth, the greater the saving potential because you get that tax-free compounding, and everybody knows I'm all about the compounding interest. I just learned about the theory behind compound interest and the mathematics this year. I've already put it to work for me. In my other videos, you see where I'm drawing dividends. And I am not a professional investor. I don't have a degree in finance or anything like that. However, you, like myself, I guarantee it, I'm talking to every one of you out there that's watching this video, have the mental capacity to invest in good foundation stocks that pay a dividend and leave your money there and let it compound on its own. Buy back into the same stock, buy back into the same stock. And like I'm always telling everybody, do not look at your account value on a daily basis or a weekly basis. What you're looking at is how many shares of a company do you own and how much dividends are they paying a quarterly, monthly, yearly, whatever. That is your main concern because that income keeps coming back. The market goes up and down. Up and down. We've seen it completely crash like in 2009. I mean, people going down 60% in account value, and by 2011 it was right back where it was. But the people that held on or bought during that time, they were buying stocks cheap. They were buying stocks that pay dividends at half of what they were paying for the year before. Dividends don't necessarily go up and down with the hard swings of the market. Now, if a company's having a little trouble, they hit some rough times, people aren't buying their product, they might drop their dividend a little. But before you just freak out and sell them, take a look at it. Are they going to rebound maybe next year? Are they going to have their dividends back up, growing again? Is everybody dropping their dividends? I'm going to make a prediction that in the next market adjustment, recession, market downturn, bear market, whatever the term is you want to use, Dave Lucas will continue to invest the same amount every week, just like he invests now. And he will continue to purchase every week stocks. Even if I buy it one day and the next day it goes down, I'm going to buy it again just as soon as I can get money back in that account. So that's my prediction. Y'all can take your bets, see if I'm right or wrong. As long as I've got, a job, good health, and I'm continuing to work, I will continue to invest even when the market turns down. That's a great time for the Roth IRA because I'm limited on how much I can put in a year. And when that stock goes down and I can buy two for the price of one, that is an excellent way to make money. So, all right, let's move on. Let's talk about income limits to a Roth. I've switched to this next page. Believe it or not, I just Googled Roth IRA income limits 2019. We find out here that a Roth IRA income limit, the income limit for contributing the maximum to a Roth IRA will go up $2,000 for singles from $122,000 a year in 2019 to $124,000 in 2020. So if you make more than $122,000 a year and you're single, and this is on your adjusted gross income of your tax return, this isn't your gross income before you take all your taxes off. This is on your tax return. Then you're probably not going to be able to just go in and open up your own Roth IRA and boom, be done with it. But like it said in the previous screen, there are backdoor ways to do it. So if you're married now, it will go up by $3,000 for married people filing jointly from $193,000 in 2019 to $196,000 in 2020. So if you're making more than $193,000 after your adjusted gross income is figured on your taxes, then you will have to find a different way to open up a Roth. I feel like the audience I'm talking to probably makes less than $193,000 after adjusted gross income is filed on their federal paperwork. So you can see that you got to make about $200,000 a year after you file your taxes and everything's deducted before you cannot open up a Roth IRA without going through a backdoor method. I would suggest to everybody out there, especially if you're married, get one in your name and get one in your wife's name and make each other the beneficiaries and your children as kind of like secondary beneficiaries. You are literally passing on to them an inheritance that they can have tax free. That is the amazing part to it. So I hope that this sparks your interest a little bit where you want to look into a Roth IRA. If I was 55, I would start one today anyways. I would not, that's tax-free money. Okay, I hold it for 5 years. Boom, I start letting the dividends pay me. Let's just say I only have it up to $300 a month in dividends. Okay, that's $300 a month tax-free money. That pays your light bill and water bill. That pays a small car payment. You save that up through the year. Don't spend it. Just let it build up in that account. You're talking $3,600 that year. You can go on a vacation after you retire, and it's completely paid for with tax-free money. How we don't do this is completely beyond me. Why we don't, I don't care what you do. You can put $10 a week into your Roth IRA, $10 a month into your IRA. You young people that don't have big paying jobs right now, you just start out in the world, you think, I'm just barely getting by, maybe $5 a week I could put in there. Okay, put it in there. And when you get $20 in there, buy a stock and have it start reinvesting in itself. I promise you, it will pay off for you in the future. So I am an Excel freak a little bit. I enjoy messing with Excel. I've started this little program here. You can see every deposit I have put in for this year since I started it on August the 22nd of 2019. This is the amount. This just simply says deposit. That way, if I'm flashing to the screen, I don't have to look up and say, okay, which screen am I on? This is the date. You can see it's weekly, every week, every 7 days. Bam, bam, bam. Now, you see here on 10/3, I put in 120, and then on 10/10, I put in an extra 20, and 10/11. So there was a little like, what did he do this for? Because I seen a stock that was dropping. And I knew that I had some money already in cash in my account. So I decided to throw an extra 20 in there and pick up 4 or 5 extra shares of this stock. So that's why you notice that there's a lot of bouncing around. But I try to make it between, 120, 150 a week. Sometimes a little higher, sometimes a little lower. But right in that area. So since I have started investing, these are the dividends that I have already drawn since August. This first one, it kind of throws the chart off a little bit because when One Main Financial, OMF is their symbol, was one of the first stocks I bought when I opened up my Roth IRA, and was just their normal dividend is 25 cents per share, but they had an exceptional quarter of that particular time, the third quarter, and they added a $2 bonus plus their 25-cent normal dividend for that one quarter. So I kind of made out like a bandit on that one. I should have got $3.25 only. I got that, as you can see right here. And then I got the bonus of $26, which all that was reinvested right back into their stock. AMPY, this is an energy company. They've already paid me $3.40. DNP, $1.11. ACRE, $2.31. VER, what VER? They are a real estate company, and anywhere where you see like Walgreens or there's another one, Walgreens, and I can't think of the other one. Anyway, they own the buildings. They rent them from VER. They also have VERF preferred shares. So anyway, BGH, I got 89 cents from them. Oh, look, BNP, again, they're a monthly stock. I got $1.50. So you can see, because this reinvested in itself, I put a little more in it. That went up by 49 cents in 1 month. It's going to go up again. I'll show that to you in another video. GLQ, $1.05. BGH again, 90 cents. Up here it was 89 cents. I literally did not buy any more BGH stock yet. And from 1 month to the next, it went up a penny just because it bought back into itself. Ford right here, they've already paid me $3.45. That's on my dividend. This is all since August the 25th when I started investing. This is what I call the master tracking sheets. My total deposits as of this week were $2,420. The total dividends were $45.65. Percentage earned is 1.89%. You're saying, well, that's below 2%, blah, blah, blah. I haven't got December's dividends paid to me yet. This is going to go up before the end of the month. I'm going to be hitting about 4.5% to 5% by my projections. So anyway, it is starting to grow. It is starting to take care of itself. And I don't know if you know what a bell curve is, but a bell curve is a curve that starts like this and eventually it turns and goes more straight up. That's what we're looking for. It's going to take a little time to build. It will build on itself. In the last, September, October, November, 3 months, basically, I've made $45.65 doing absolutely nothing, and this is tax-free. I don't have to pay any taxes on this $45.65 right here. That's kind of nice. So this is my master charts page. This is my dividends. I told you that first month when I got that big bump from One Main Financial, it kind of threw the curve off, and then, oh my gosh, it looks like it fell down. But actually, that should have started out down here. But hey, if somebody's willing to give me an extra 26 bucks because I own their company and it's dividend time, I'll take it. So anyway, it dropped down here to 521 for October. Then November was at 239. Remember, not all of my stocks pay every month. Some pay quarterly in August, some pay quarterly in September, some pay quarterly in October. So it just depends on how I have them spread out. You can see, though, today is December the 8th. I've already made $5.40 in dividends in the first week of December. I get so excited. I already know what's coming in December, but I can't put it on here until I earn it because I don't want to get anybody hopes up or misleading. But I project it's going to go up. I will report on my Roth IRA every week so you can kind of see how it's starting to go up and so forth. And maybe encourage you to step out there, not be afraid of all the stock market terms, bull market, bear market. It's all a bunch of bull. If you listen to all the terms, it's not that hard. I've got several videos out that show you how to look at companies for dividend investing. Now, I'm going to tell you right now, if you're a capital gains investor, that's cool. I'm not against capital gains investing. Believe it or not, I'd done the day trading whenever the market crashed, and I was able to make money during that time. But now that I'm older, I like the long-term game. I like to put the money in there and let somebody pay me back. So it's enjoyable. It's a fun game. I know there's a lot of gamers out there that enjoy the excitement of the games. This is truly the funnest game I've ever played. So the next one down, these are my deposits by the month. You see a trend line here. It looks like it's going down. Remember, this is only the first week in December. So in a week or two, I'll start to report on this. You'll see this line start to come back up. It's kind of cool just to watch. But in August, it was $627, $488 in September, $710 in October, $475 in November, and so far in December, the first week is $120. So here is the last chart I want to show you today. These charts are easy to make in Excel. If you have any questions or want to know how to make one, put a comment in my comments. Say, Dave, I need you to explain to me how to make one of these charts and put together an Excel book so I can kind of start playing the game as well. I'd be more than happy to help you out. So this one is my total investments cumulative. Instead of just going up and down by the month, it's showing how they're building. This blue line down here, this is my dividends. So you can see in September I got 32.65, 37.86 total. That's total dividend. And then by November it went up to 40.25 and 45.65 already in the first week of December. That's total. That's not for December. That's total. This is a totals chart. So even though you can't see it, it is actually starting to come up off that zero line. The problem is the XYZ on this chart is up around almost getting close to 3,000 on deposits. So it makes this one, but you will start to see this one start to bail up shortly. It's going to be exciting. This is not something that is like totally difficult to do. If you can work a smartphone, if you have an email address, if you have a bank account, and if you can spare $1 a week, $5 a week, whatever, 10,000, whatever you can spare, 50 cents, I would encourage you to start investing money in a investment account. You would be money ahead to look into a Roth IRA at pretty much any age. It is a great way to leave an inheritance to your family, your wife, your children, whatever the case may be. Here's a for instance. Something happens to me. My wife draws her dividends off of my account and her account, so she's getting all this tax-free money. Something happens to my wife. Our sons inherit both of our accounts, so let's just make it easy. Say we're getting a total of $900 a month between the two accounts, and we happen to have 3 sons. Each son gets $300 a month tax-free. Oh, that's not really a big deal. Well, I believe my sons are smart enough that each one of them could take that $300 a month and have it directly deposited into their IRA. And then, in a way, I am helping build my children's retirement account. And hopefully they would name their children's beneficiary to theirs. So one day my grandchildren could actually benefit from the Roth IRA that I built and I benefited from. So when you really get to look at it, the potentials that go with the Roth IRA are phenomenal. I might be mistaken on some of this, but my attorney says that the way I have it set up, it looks like that the way I just told you is what would take place. Now, when my children die, whatever's in the Roth IRA would be immediately dispersed to their estates. So, but they could live many years drawing, like I said, hypothetically, $300 a month each. They could use that money however they wanted to, but if they were smart, they would have that directly deposited into their Roth IRA and essentially be building their retirement without taking a penny out of their family's money. Anyways, this is kind of an overview of a Roth IRA, the potentials of a Roth IRA. Once again, I encourage you, whoever you are, however much money you make, look at getting you an investment account. The big plus to investment accounts right now is there are no commission fees on the trades. That is phenomenal. It used to be $7. Like if you bought 10 shares of something, it was $7. If you sold 10 shares of something, it cost you an extra $7. That is gone. Doesn't exist anymore. So take your money, put it in an account, start to build something, let that money start drawing you dividends, and then your money is making you money. And life gets a little bit easier every time you get a deposit from your dividends and you start to see your account grow. Please subscribe to my channel if you want to see more videos like this. I'll be going over things. If there's something you want me to cover in a video, please leave it in the comments. I don't mind doing the research. I have the time. I'm very blessed to have a job like I do where I have the ability to do several different things at the same time. And I always think it's amazing when people have the opportunity to change their life, their situation in life, and it's really amazing when they actually do it. Anyway, I wish you all the best. Have a good week, a prosperous week, and we'll see what the market does and what companies I can buy this week that are going to pay me money residually for years and years. Thank you.